Ladies and gentlemen, welcome back to the Finstep Asia Edge podcast. We are talking to top founders and CEOs leading fintech and Web3 firms in the region as well as globally. Today with me is Brad Jones, CEO of PayMe, who comes with an extremely rich experience in financial services and fintech in the region. And I'm very delighted to have found his time for us to do this podcast. Welcome, Brad. How are you doing today?
Yeah, great. Yeah, thanks very much.
But as you were talking, you've come into Hong Kong a couple of years ago. How have you found the change or the life in Hong Kong over the last 2 years?
It's been excellent. So it's just coming up to 18 months now.
Nice. Okay. Yeah.
So I think I came into Hong Kong at the right time. So post the quarantines and all that sort of thing. Very interesting. Obviously, a lot of my experience has been Southeast Asia. So,
correct. Yeah.
So coming up and getting my foot into the water in North Asia and China in particular. Yeah. In addition to Hong Kong, it's been great.
Great. Look, we will come to PayMe and we'll talk about how they have grown and now under your leadership, your plans. But I want to take a step back and maybe from an entrepreneurial perspective or career perspective, you started off in the Marine force, right?
The Army, actually.
The Army, right? All the way back. And then you got into investment banking, corporate banking, going on to then building your own fintechs. How was this journey from being in the Army to switching to the corporate world?
Yeah, I mean, it was quite a journey. In fact, my first deployment overseas was to Hong Kong, believe it or not.
Yeah.
Many years ago when I was a young lieutenant in the infantry in the Australian Army. I was up here for about 2.5 months.
Nice.
And it really was my first trip to Asia. And I think one thing that actually really gave me a taste for was the life in Asia.
Sure.
And I was really passionate about finding an opportunity to get back here to work. I didn't realize it would take me as long as it did, but I decided after about 10 years in the Army, I wanted to do something different. So I went back to business school.
Yeah.
And then found myself in the corporate world, initially in project management.
Yeah.
And that's how I got into the banking sector. I actually joined an Australian bank just after the .com boom, actually.
Yeah.
So quite some time ago. And worked in a number of different projects, really across the whole spectrum, actually, from capital markets through to retail payment systems. So that was my sort of entry into the banking world.
Yeah. And how have you seen, so I know you were in the banking world and then you went and, you're the founder of Wing in Cambodia, right? Very early days of fintech. I don't even know if fintech was a term.
It wasn't
a term at that time,
no.
Right? So what led to that happening for you, and how was that journey for?
I had this aspiration to work in Asia, and I had an opportunity initially to work in a new business unit that ANZ had at the time, which was expanding into Asia through buying partnerships. So we had partnerships in Southeast Asian markets.
Okay.
We had a partnership bank in Cambodia, credit card companies in different markets. And so I started in that role as the head of operations, actually.
That's great. Okay.
Which was very heavy project management and helping these partner banks implement new systems, core banking systems, and so on. So in that experience, I was actually traveling to Cambodia a fair bit.
Yeah.
And myself and the CEO of the bank at the time wanted to find a way to service employees of the garment sector clients that the bank had. And at that stage, it was about a year after M-Pesa had launched in Kenya.
Yeah.
So the whole concept of mobile phone banking was starting to take off.
Yeah.
And we thought we could do something similar. And so it was in my role actually to sort of look at those new business cases.
Yeah.
So with my team, we built a business case, asked for some seed funding, and we were very fortunate to get supported by some great executives in the bank at that time. So, I got so passionate about this opportunity that I actually applied myself to be the person who would go and actually implement this new business. So I moved to Cambodia at the end of 2007, started 2008.
Yeah.
With a small amount of money. It was very much a seed capital amount of money. And then we had the goal of standing up a brand new mobile payments business in under 12 months, which we successfully were able to do.
Oh, okay.
Yeah.
What would you say? So one, I would say, what was your motivation? Why did you want to go into Cambodia, which with it's an emerging market, but still in terms of in the region as well, it's among the ones that was much smaller and not probably as advanced as some of the others were.
Yeah, I think there were two reasons. For me personally, I was very interested in the impact that fintech could actually have on people who are unbanked.
Sure.
And at that stage, 95% of the population were unbanked. But we were seeing a significant amount of the population who were starting to get access to mobile telephony.
Yeah.
So we saw an opportunity there. And I thought to be able to actually set up a business that was obviously doing good for the country at the same time as being potentially being profitable was a very interesting opportunity. I think Cambodia, as a market, it was obviously going through a recovery period after many years of strife. And the central bank there was very flexible and open to new ideas. And you see this today. I mean, if you look at the governor of the central bank, today she was a junior officer in the central bank at that time. And in fact was the person who was actually working with us to actually work out a regulatory framework for digital payments in Cambodia.
Sure, yeah.
And so I think a lot of it had to do with the fact that the regulator was very pro economic development and very pro finding solutions for the poor. So
nice. And from a learning, right, I think it's an important element where, as you mentioned about the person who's now there, and they're also leading a lot of good work on quasi CBDC and central bank money, digital money, let's put it that way.
Yeah.
Right? How was that experience coming from a very developed market in terms of Australia, probably at the time leading Asia when it came to digital? A lot of good comes out of Australian fintech, going into a market where infrastructure is not necessarily there. The economic empowerment is happening. Financial inclusion was low. Banking was very low at that stage. How did you approach it? Where I'm coming from is you often see people move from a developed market to an emerging market and try to apply the same principles to this market. So did you do the same, or how did you approach it and manage to successfully make it profitable in that 1-2 year period that was your target?
Yeah, I mean, I think firstly we actually weren't profitable actually. So it took about 5 or 6 years, I think, for Wing to become profitable. But I think what we did is we purposely left behind a lot of the old ways of doing things.
Sure.
So for example, we didn't integrate into the bank systems. We actually developed a standalone stack in country. We really looked to what was happening, particularly in Africa at the time, which was really leading the whole mobile money space, which was sort of the forerunner of fintech.
Yeah.
So I traveled to Africa. I actually went and met people from M-Pesa. I met the regulator. I met people in South Africa. We met people in the Philippines at the time.
Okay. Yeah.
I mean, people see GCash today, but a lot of people don't remember GCash back in 2005, 2006, where it was still a very emerging business opportunity.
Yeah.
So I think we really looked at trying to take the best ideas out of what was happening in developing markets where this type of business model was starting to take hold. And if you looked at the initial business plan for Wing, it had elements out of what was happening with mobile banking in South Africa, elements out of what was happening with M-Pesa in terms of the agent network. And then really us trying to find product market fit in Cambodia at the time.
Okay. And you went from, with Wing, you had a stint at Visa for a short period in innovation and payments, and then you set up Wave, right? Yeah. So if you could talk through that process of, what drew you to now going from an entrepreneur with ANZ and Wing to now being an entrepreneur and also in a adjacent market, which is in Myanmar, right? Yeah.
Yeah, I mean, when I left Cambodia, I went to Visa, but it was a growth role in Visa as well, because it was Visa were trying to find relevance in these developing markets, and we're trying to build products that were actually going to allow emerging market consumers to transact. I think we were struggling to find a product. And actually, I think
Okay.
now with tokenization, that has actually changed significantly, actually. But I think the opportunity with Wave, when it came along, I was very, very open to it, predominantly because, particularly being in Cambodia, we had looked at Myanmar and we saw what a large market it was. We saw that it was a market without banking. It was a market without mobile telephony.
Yeah.
And I remember thinking that all it would take would be the mobile networks to roll out there.
Sure.
And you could actually, it was complete virgin territory for fintech. So when the opportunity came, and particularly with two very good partners in Telenor, the Norwegian telco, and Yoma Group, who are the local conglomerate, then it was a very, very good opportunity to go and start something new.
And how was that experience, building out a company, being fully in charge? I know you had, here again, you had some strong corporate backers, but a slightly different
it was
setup, right?
It was. And look, when I started that role, there was only about 3 or 4 people on the ground in Myanmar. So I would say it was pretty much just a PowerPoint at that stage in terms of the business model. The shareholders had a handshake agreement. We hadn't set up a joint venture agreement at that stage. But I think the opportunity was really, we found product market fit very quickly. And I think the reason for that was that, firstly, there was a massive market demand for our initial use case, which was money transfer. Because it was just so difficult to move money around Myanmar before fintech came in.
Sure.
I think secondly, I'd learned a lot of mistakes actually from my time in Cambodia, and I think one of them had been around sort of the corporate investment that was required actually for an entity like this. And so I made sure that the shareholders were actually putting enough capital in, which was important. And then I think the other aspect was that we were in at the ground floor, and from the telco rollout, and what was happening in Myanmar, which was quite unique in the developing world, is they completely leapfrogged to smartphone.
Correct.
So there was no feature phone at all. And so that leapfrog enabled us to really build quite a different proposition for emerging market consumers to what was happening in other developing markets around the world.
And what other things? So I think 2 things when I want to just take maybe a deeper dive in. One was you mentioned about shareholder investment in the initial stages, right? How does a founder in today's world, where there is even more scrutiny in terms of revenue generation, is a big focus for investors, what would your suggestions, advice be for founders on navigating that expectation, but also the ask, right? Because initially you're like, okay, I need an X amount to build to stage Y, and then you need more. But in some cases, there's that, why didn't you reach that milestone conversations kick in? So how do you do the stakeholder management in some
I think the experience I'd had in Cambodia, we essentially had run out of cash in the early days. And we needed to get ANZ to continue to fund, and they didn't have a strong appetite to do it at that stage. So that experience had been a pretty raw one. I think in terms of Wave, I was very eager to make sure that we hit our expectations around the business case. And so we were very aggressive in the market in terms of our rollout. We were very careful about how much cash we spent. And then I think lastly, we were very, very quick in rolling out our distribution network. And our distribution network is really what gave us the market strength that we had. And it really led to us reaching profitability. We actually reached profitability within 2 years of launch.
That's amazing.
So once we got to that point, I mean, we only ever took 2 rounds of funding. And then even to this day, the business is self-funding and actually has been throwing off cash now for about 6 years.
Nice. And I know our first interaction was when we were doing the survey for the Financial Alliance for Women, looking at how fintechs cater to the women's network or women users, and the distribution model that Wave has was one of the key learnings that was there for the research. I would love to have our audience understand a little bit more about why it was effective, and also if you would be able to touch upon why it was more successful with women users who typically tend to take up fintech products a little more delayed than the men, right?
I think Myanmar is an interesting market. And one of the insights we had from the research we did was that the senior woman in the household is the financial decision maker.
Sure.
And she's the bank, the CFO, if you like, of the house. So that meant that when we were marketing, we actually used very strong female imagery in terms of our branding. So we had a prominent female comedian who was a bit like everybody's favourite auntie as our brand ambassador, where everyone else was picking sort of the pop singers and the glamorous ones. We were picking someone who was very different. So that helped us in terms of the positioning we had. I think secondly, we were offering our service predominantly through agents as an agent-led business. And about 70% to 80% of our agents were actually women. And even though that may have been a male who was registered, like the husband could have been registered as the shop owner, generally the shops were run by women. And what we found with female agents was that they were quite business savvy. They were very much focused on the revenue and profit generation that they got from our service. And predominantly it was because of all the things you see in emerging markets. When women earn the income, that income goes into education outcomes, food outcomes, health outcomes for children and the family. And so, you know, what we were able to see through the commissions that we were paying out through the distribution network was that it had really a multiplier effect in terms of economic benefit to the country.
That's great. And I really want to touch a little bit more about the lessons on reaching profitability early, right? Despite having so many, if I may say, stakeholders, because you have a distribution network, you have a lot of people who are taking in a little pie of everything you're doing, right? And it's almost, payments tends to be a very thin layer in terms of margins. So one, how did you manage that? What was almost like the sauce or the secret sauce to it? And the second, which is even more tougher, is remaining profitable after that, right? Because early days, you were among the first ones you were rolling out. So some advantages of being maybe an early player, but then you have competition that kicks in very soon. And that was a period where there was a lot of fintech growth just across Asia, right? So
and I think, I mean, look, absolutely. And I think one of the things we found was that, you know, as a fintech business, particularly a payments business, you know, scale is everything. And what I remember in the early days, particularly a lot of the local staff, they couldn't quite believe we would get to the size that I knew we would get to. And we would we would track our numbers every single day. We would, in fact, for many years, actually, we would have a daily stand-up at the start of every morning where we would go through the numbers from the day before. And I still remember the first month when we were tracking our transactions for the month, and we had done 5,000 transactions. And I remember getting up in front of the staff and saying, you know, this will be 5 million one day. And you could see none of them believed it. But then the next month, you know, we went from 5,000 to 11,000 and then 11,000 to 20,000. And then I started to tell them, you know, the power of compound growth here, right? We're starting to see momentum build. So I think really what we were doing was we were laying out the distribution network. We were focusing on corridors and really making sure that we had very, very good service in those corridors. And then we were paying out actually at that stage good commissions to agents as well. So, and they started to see the volume come in, and then we started to see the customers and the agents sort of building in tandem. And so then as that volume started to increase, then you know, obviously the power of compound growth, we just started to see it hockey stick. How did we compete? I mean, at one stage, I think we had 15 to 16 competitors in the market. Every single bank went into fintech in that market, which I used to always scratch my head over. And we had sort of, you know, big players like True Money and so on as well. I think the biggest defensive moat we had was the agent network we had. We had close to 70,000 agents, and we really covered geographically the whole country. So, and it's a very big country. So I think our defensive moat was one that was very hard to shift, and none of the competition could really get into that highly profitable agent network where the agents will be loyal to you because they know that the revenue is going to come.
It's an interesting comparison or parallel to India, where if you speak about, say, Paytm, MobiKwik, the early ones in India, 2010, 2008, 9, you know, that's when they came about. But they took a long time to get profitable, despite the scale, you know, having hundreds of millions of users, big amount of VC money coming in as well. And I think the key element there, they were probably working on a model where it's direct to customer and retaining and loyalty benefits. So you're buying, whereas you went with the agent model, right? Which is it's a ironic model in Hong Kong as well when it comes to insurance, where you have tens of thousands of insurance agents, and the insurers prefer going there versus online, which would be more profitable for them, but just because of this agent element. So we'd love to hear your thoughts on agents in what is meant to be a low-touch, human intermediated world, but selling a digital product at the end of it to agents.
I think the end of the day, I mean, because we had two business lines in the end. So we had the agent network, but then we also had the digital business, which is obviously not dissimilar to a PayMe, like a mobile wallet business. And the difference in a country like Myanmar and Philippines is similar as well, is because the majority of the population is unbanked, you're not going to be getting funding in through bank accounts or credit cards, right? So most of our fund-ins still came through the agent network. And so this is why, for us, it became such a strong defensive moat, because in the market where few people had bank accounts, we were able to basically make sure that our accounts were liquid. And those two business models came together. I think the other thing with the distribution model we had was that the agents became effectively human ATMs, and the ATM network was really limited to the major cities. And so we were able to really go out to the smallest village in a lot of cases. We used to always say, as long as there was commercial activity in a village, be it a small market or something similar, then we could have an agent. If there wasn't a market there, then it was too difficult. But that enabled us to get down to a very low level of in the communities that we serviced. So I think they were the key things, is that the absence of banking infrastructure, ATMs, POS, bank branches. I mean, there's still very few bank branches in the country. And you had the choice. For example, a farmer who's receiving money from their son or daughter working in the city, they could get on the back of a motorbike for 50 kilometres into the closest city for a bank branch, or they could go to their nearest agent to cash out. And so they're always going to pay for the convenience of that cash out.
Somewhat similar to what M-Pesa kind of tried building, with that mobile phone where everybody's going. And it's interesting in terms of loyalty, and just a comment that I wanted to make is, at times I feel loyalty is both overvalued and undervalued at the same time. What I mean by overvalued, in the sense, when people are chasing customer acquisition, they offer out those coupon vouchers. I mean, we've had that in India, we've had that here, we've had it in China, in all the major markets. Go here and you get a $50 or whatever, or 50 rupees, and then a new competitor comes in and gives the same, and people jump, right? But so that's where the overvaluation of appreciation of loyalty versus under appreciation is, if you have a good product, once they settle down with you, they don't really see the urge to switch. It's almost like banks, right? Where the inertia to move bank accounts is very, very high, even in today's world, even with the younger generation, for that matter. Would you agree? Or
I think what we found in Myanmar was that, let's say there's 10 to 12 wallet apps in the market. Many consumers would have every single wallet app. They would have gone through and actually done the registration process. But it's not so much whether they've downloaded, it's whether they're an active user. And so what we tended to find is, whilst consumers would actually, go and download these apps, their utility to them was actually fairly limited. Because in general, they would offer a similar proposition in terms of bills or top up or money transfer. But then let's say you're using one of the bank, because there was no interoperability in the market. So if you're using one of the bank wallet apps, then if you're sending money to someone, then they still have to have an agent. If they didn't have the agent network, then they couldn't get their money. So I think we were able to sort of bring these two parts of the business together and have a very compelling proposition.
Nice. And from Wave Money, you've now become the CEO with PayMe, which has been Hong Kong's leading wallet for quite some time, I would say, right? But then, so it's moving from a fintech back into corporate, but not a corporate. It's a fintech inside a bank conversation. What attracted you to PayMe, besides the beautiful city that Hong Kong is? But what was the key value proposition, as it were, that brought you into this?
I think it's the fact that HSBC had actually gone and done the hybrid fintech sort of market or business opportunity. I mean, they had seen an opportunity, and I've actually spoken to some of the early founders of PayMe to get their insights as to where their heads were when they were actually creating the PayMe proposition. And it's very interesting, actually, because they were looking at what was happening around money movement in a lot of markets, Philippines and Cambodia and these other markets. And they were thinking, oh, that's an interesting proposition for a market like Hong Kong. So I think in some ways, whilst it's a developed market proposition, they were looking at how they could take some developing market ideas and bring it into Hong Kong. So I think I was very attracted to joining a business that had a very high profile, had done very well, but was really on the next step of its journey. And, to come and join an organisation like HSBC, one of the world's leading banks, but at the same time to have this sort of fintech inside the bank, I thought would be a really interesting opportunity.
And they'd also gamified it well, right, in the initial days in terms of, making friends, sending over, splitting off bills is one of the key value propositions which they kind of brought it in from Square and others in the US in terms of bringing it here. But the interesting thing is, when PayMe started, FPS was not around, which is the faster payment system in Hong Kong, real-time payments, interoperable, right? When you came in, they were like, everybody was involved from banks to everybody else. So then becomes a question, and this was probably where your challenge may have been, or you looked at in sense of the big Chinese payment players had now established fairly well in terms of their Hong Kong wallets. Earlier it was mainland wallets, so WeChat and PayMe, WeChat and Alipay, where Hong Kong became fairly established, decent number of users for local users. And then you had the other wallets plus the virtual banks, which are purely virtual again, so can be more competitive than other banks.
Yep.
So how did you see the competitive landscape, and what were kind of your focus areas in the last 18 months, and how's that gone up? How have you seen that?
Yeah, it's a very competitive market. I mean, and then on top of that, you've got obviously the Hong Kong consumer has a very strong preference to cards as well. Yes. It's a very heavy card market. Yeah. So I think what we're trying to do is to offer up more utility to consumers.
Sure.
And I think one of the obviously we're looking to monetize PayMe, and that's where a lot of our focus has been.
Okay.
One area that I saw when I came in is that we didn't have enough merchant locations.
Yeah.
And so that's been a big focus in the last 12 months.
Sure.
We've now reached 100,000 merchant outlets, which is getting us, it's sort of more than doubled in the last 12 months.
Yeah.
So it's getting us to a point now where, it is very easy to use PayMe for merchant payments at pretty much most merchants. And we're not stopping, we're still continuing to grow. I mean, we've launched some new features. We've launched bill payments in the last few months.
Okay.
We're just launching ad tech services now.
Okay.
And then, of course, recently, we announced the launch of UnionPay virtual card inside PayMe. And we're already seeing sort of amazing progress with that, actually. And, obviously, we're targeting the Hong Kong consumers who are going to Shenzhen and Guangzhou every weekend. I've been up there myself in the last few weeks and have been using the product up there, and it is seamless. It's a fantastic product. It's very easy to do transactions, and obviously then as you need to top up, it's very easy to top up from your HSBC bank account when you're in these markets and do these transactions. So And
you also have the PromptPay Thailand initiative as well, right, where you can now use PayMe.
Well, anywhere where there's a UPI QR code, you can use it, and we're seeing transactions come from Japan, from Korea, from Singapore, from Thailand. So we're quite excited about actually what that product's going to do.
So is that integrated or with the local providers, or?
No, we're riding on the rails of UPI at this stage, yeah.
Okay. And the question that quite often comes now in today's world, where I'm a HSBC bank user, as you said, we all try out different ones. I have the virtual banks as well, but I've had HSBC since I came into Hong Kong as a student. And I hardly use my card, right? And I don't even I don't even know where I've placed my debit card, right? Secure somewhere in the house, but if you ask me to locate it, it'll take me an hour to find it. Largely because I use mobile QR code to withdraw. Now, what I'm trying to say there is I could also make my prompt pay payments using HSBC Mobile in Thailand. So when you look at, in say 7-8 years ago, it was like, okay, the mobile is still, HSBC Mobile is still developing, the wallet came in. Would be curious to see your perspective on the differentiator, right, or it's friendly internal competition, as it were, in the group between a PayMe versus HSBC mobile banking, from specifically the payments and perspective or wallet usage.
I think we're serving different needs. I mean, I think, for a start, PayMe is available to any customer
Sure,
who has a Hong Kong ID.
Correct.
Right? So we're not restricting it to HSBC customers.
Yeah.
I think we're very focused on the merchant payment use case, as opposed to the mobile app is much more of a mobile banking app.
Sure.
So I think we serve different purposes.
Okay.
Having said that, we work closely together as well, right?
Yeah.
So we're looking at ways in which we can make the experience more seamless for consumers between the two apps as well.
Okay.
So I think they're complementary in terms of the way they work.
Now, HSBC, PayMe's got close to 40-50% of the retail market in Hong Kong in terms of numbers, right? Retail users, and by far the largest in the market. How are you seeing the future for PayMe in the next, say, 18 months to 3 years? Broadly speaking, what would be the things that PayMe would like to achieve, and what can customers also expect in this highly competitive market, but also an exciting market? Because we've moved. So when I came in, I used to find mobile services or internet services in Hong Kong broadly across industries a bit archaic. Coming from India, just generally speaking, was much more high touch, much more better served. But now you can see that it's a pretty good standard across most things in Hong Kong, and most financial services, leading financial services players have a good offering, right? So it is a competitor, but it's also exciting because now you can do a lot of other things with it. So what would you say would be the interesting things to expect in the coming months?
I mean, we're looking to grow the customer base always.
Okay, sure.
Yeah. We're never comfortable with where we sit. We're very focused on our active users and growing the active user base.
Yeah.
Growing the merchant base.
Yeah.
And as I mentioned before, so I think particularly in the online space, the proposition. To be honest, I don't use credit cards online now, unless I absolutely have to.
Okay.
Because the seamless process of using PayMe to pay for Taobao, Hong Kong TV Mall, these type of merchants, Food Panda, Kita, it's just fantastic. And you're authenticating in a very safe way.
Correct.
So I think continuing to expand there, more utility for customers, and looking at ways in which we can increase the number of opportunities for customers to transact with us, and increasing the monetization that comes with that.
And what are you expecting broadly from the Hong Kong fintech world right now? You've seen Australia when it was emerging or was strong. You saw emerging Asia in terms of Southeast Asia, and then you come to this highly saturated banking world, but also interesting growth from a fintech perspective. Where do you see Hong Kong's fintech going in the coming years?
I think it's. I've been pleasantly surprised by the Hong Kong fintech ecosystem. I mean, I obviously had seen it before COVID, and seen how, I think I'd attended the fintech festivals from the beginning up here, and obviously there was a lot of excitement and a lot of energy and activity. I think it certainly had slowed down during the COVID period, but what I'm seeing particularly in the last 12 to 18 months, and I'm very much looking forward to Fintech Festival coming up in a couple of weeks, because I think this is almost like it's going to be back to where it was around that sort of 2018, 2019 period.
Yeah.
So I think my view on it is that it's starting to accelerate again.
Yeah.
A lot of sort of GBA focused activity.
Correct. Yeah.
And the payment space is obviously as competitive as always. So,
And what do you find in these competitive markets? And this is me curious, right? When I came in from a capital markets trading world and looked at banking broadly, payments was there, and I would always look. I'm like, why are there so many payment companies, right, across? But even in a one vertical, you would see dozens of wallets. Like when I went into Indonesia the first time for the Indonesian Fintech Festival 2019, there were 250 fintech firms, of which 50% were payment players and 25% serving these payment players, right? And you see that globally. And I've reached a stage where it no longer surprises me if there's a new payment product or a new payment company coming in. Why is there still so much scope and a value in this market? Why do you think there is? I mean, maybe presuming there is, when there's so many people coming in.
I think payments is a tough business, and I think it over time, payments will sort of it becomes obviously in Indonesia, for example, where there were 250, there wouldn't be 250 there today. You see that consolidation starts to happen, and I think we're certainly seeing that in markets like Indonesia. The Philippines is a good example. I mean, if you go back 10 years, GCash and Smart were both competing. And they've both gone two very different directions. Smart going down the digital banking path as Maya, GCash doubling down on payments. But anyone else who's looked at wallets in that market, really haven't been able to get a foothold. I think the same thing will happen in Myanmar, where I've come from. Myanmar has its other problems, of course, but I think you'll see a consolidation of the payment businesses there.
Okay.
Hard to predict in Hong Kong, very different market. But yeah, I think at the moment, we're still, there's a lot of SVF licenses issued. But there's probably only a few
who use them,
a few wallets that people will talk about, right? So, so I think even in this market, you're sort of seeing that, the bigger wallets are the ones who've got the
consolidation in some senses. Last question maybe is, when you move from being building your own fintech and leading that to moving into a fintech inside a corporate, from a leadership perspective, how did that change, right? The belief system of somebody who has seen the biggest banks in the world, or, being with one of the biggest banks, so scale is something that's not a challenge to necessarily convince people. What were your leadership levers that you changed or focused on?
I think the main difference coming out of out of Myanmar, we were the leading fintech in the market.
Sure.
So and that gives you a certain mindset, which in some ways can maybe make you a little bit complacent, actually.
Yeah.
So what I would say is, coming into this market, there's no room for complacency. We're very much trying to compete as strongly as we can in a very competitive market.
Okay.
So I think for me, a big part of my focus has been trying to get across all elements of the business as quickly as I can. Elements around the regulation. We've brought some new leadership into PayMe. So really, it's working with the new leaders that we've brought in and really building the culture that we want to take going forward. That's
great. Brad, it's been a pleasure talking to you. Thank you so much for taking out time for this. I've learned a lot, understood a lot more about the payments business and the approaches to how you've been flexible in changing based on the objective. So thanks again for being part of it. Audience, stay tuned for more interesting conversations with Finstep Asia Edge. Click like, subscribe, and follow us. And a shout out to Hong Kong Fintech Week, which Brad was alluding to. October 29th and 30th are the key days. Mark them.